going through a sea change as we speak. There have been technological innovations that are disrupting the industry. And other than technological innovations, there are also geopolitical changing economies or too much exposure to one particular asset class that are making huge changes in the overall banking industry. If I talk about US banking industry, it has gone through a crazy roller coaster ride in the last 6 months. And keeping that 6 months or last 1 year aside, overall banking industry has been going through a lot of disruption. In the last 5 years, we have seen emergence of more than 300 digital banks. Some were started by completely new players, and then also traditional banks started to play a catch-up game. And this is the reason why we wanted to host this thought leadership panel on evolution of digital banking with Steamchain. This is Pankaj Gupta from EthAum Venture Partners. We are a deep tech accelerator and fund based out of Singapore. We have approximately 90 startups in our portfolio. These are AI, ML, blockchain, IoT, robotics, AR, VR kind of startups from different parts of the world, stages, and sectors. Steamchain is one of the portfolio startups that we onboarded in January 2023, and they make international payments easy, fast, cost efficient, and secure. Just like how digital banks have been changing industry by making the process more efficient, flexible for the customers, Steamchain is providing those kind of flexible and efficient support to their customers. Now, without further delay, I would request Dan to provide a brief introduction of Steamchain, and then I would request our panelists to do a brief introduction of themselves. And then Scott will take us through the panel discussion by being a very fantastic and inquisitive moderator. So Dan, could you please do a brief intro?
Yes, we're delighted to be here, and we've got an unbelievably knowledgeable group of panelists with us here today. And they're going to be discussing many of the issues that we see in the marketplace as we talk to our direct customers and with our channel partners. So let me just give you a little bit of context. Steamchain has created a platform that makes international payments a very cost-effective alternative, and it's very easy to use, but most importantly, it saves our customers time and money. Now, our platform has two payment gateways. The first is a standard FX method, and the second utilizes digital asset exchanges and stablecoins like USDC to make payments. So using technology, we're saving our customers up to 70% over the costs of what they were currently paying. Now, saving time and money for our customers is great, and they love it. But what's really interesting as we talk with our customers, we see some very interesting questions and confusions about what's going on in the marketplace and what's going on with the technology. And most importantly, how is it going to affect their business? And this is not only coming from the businesses that we talk to, but from banks, financial institutions, and from government agencies as they struggle with what kind of regulations to impose as technology continues to evolve at an incredibly accelerating pace. So today's going to be very informative for all of us. I'm looking forward to it, and I'll turn the floor over to my co-founder and COO, Scott Brown, who will be moderating the discussion. Scott?
Thank you. Yeah, we're glad to be here, and thanks again to the panelists for taking the time to have this discussion. Pankaj, would you like me to start, or do you have?
Let's go for the panelist introduction first.
Yeah,
so,
perfect.
Nitin, do you wanna do a brief intro, please?
Sure. Thank you so much. It's a pleasure to be here, and thank you so much for inviting me. I'm Nitin Soke. I'm currently based out of Muscat, Oman. I have over 2 decades of experience in digital transformation, working across various banks. I worked at Deutsche Bank, Standard Chartered, and DBS, and have built several products and worked with corporate retail customer bases. Over here in Oman, we see a lot of transformation kicking off. So happy to join you guys today and also see what's happening across the border.
Thanks a lot, Nitin. Appreciate it. Brian?
Yeah, thank you. Very excited to be here. So Brian Koenig, I am Vice President, Director of Business Solutions at Nimbus. So Nimbus is a provider of core processing and digital banking solutions, mostly in the community bank space. So yeah, very excited for this specific topic because what I get really involved in a lot as part of our product management team here is payments and small business and commercial banking solutions. So this is a very relevant topic for us.
Fantastic. Thanks a lot, Brian, for making the time. Sawan?
Hey, Pankaj, thanks for having me again. Great to meet the panelists. Quick intro about myself. So I have over 17 years of experience in investment banking and digital banking across the UK, US, Europe. I led the go-to-market strategy for markets in the UK when they launched in 2016. I transformed into FinTech, corporate venture capital. I was also one of the initiators of round of change concept in the UK, which was, again, adopted by Acorn and Moneybot. Most recently, I was the head of digital at Maybank, which involved partnerships and strategic investments.
Fantastic. Thanks a lot, Sawan. Really appreciate your presence today. And now I will turn it to Scott to ask some really interesting questions and get fantastic insights. Please, Scott.
Absolutely. Thank you. And again, appreciate the time. So we'll start with a question that should spur some good conversation and perhaps even some debate. But as FinTech leaders, I'll ask you, all three of you, what are your biggest frustrations with the ecosystem and the policymakers and or startups in this particular space that seem to be popping up pretty frequently around the globe? And Nitin, why don't we start with you?
So I think there is a frustration, but there's also an opportunity when you look at it. We don't, at least in the MENA region, I see there's a lot of new regulations, frameworks are still in flight. And those are things which, if you look at it from how I look at FinTech, it's almost like a speedboat, looking at solving problems and building out a business. And for incumbent banks like ourselves at Sohar and the wider banking community as a whole, we always try to see how things can grow. So there's always a pace, which needs to be always there. And to be very frank, I think more than the solution, getting the right timing is very important for any success. So that's probably, I would probably say, is an opportunity and a challenge.
That's great. So the is the speedboat getting fueled while it's running at top speed across the water? Brian, do you have some thoughts to share on that subject?
Yeah, absolutely. So, obviously here in the US, we're dealing with a kind of an ongoing, unfolding banking crisis, I guess you could call it. We've had three major bank failures in the last couple months, and we have what looks like might be another one on the way now. So that's caught everyone's attention, and there's a lot of debate now about regulation and are the regulators doing their job correctly? Are they providing the correct levels of supervision? So that's all relevant, and that's kind of, I think, what it is everyone's top of mind right now in the banking and fintech space in the US. But from a regulatory standpoint, I think the thing that is probably my biggest personal frustration is a lot of times our policymakers, at least here in the US, it seems like sometimes they don't necessarily understand the technology that they're actually regulating. So a good example of that in my mind is crypto in general. We have regulators that are policymakers that can't decide, should it be regulated as a security? Should it be a currency? Should it be something else? And so there's so much just uncertainty that's caused by that. So that kind of, it makes it sometimes hard to, I think, to plan and build strategy, because you don't really know, what obstacles are going to be thrown up by you in the next year or two, because they may just take an about face on you. So a good example of that, I think, is Custodia Bank here in the U.S. That they have a charter from the state of Wyoming, and they're trying to build a a bank that basically provides crypto services, and the Federal Reserve denied their application to join the Federal Reserve System. But at the same time, the Federal Reserve is making conflicting statements about, well, we need to expand our crypto capabilities in the U.S. and we need to make it easier for new banks to start up. So it's kind of a confusing time.
Do you have any thoughts kind of on where this is all headed, what you're seeing right now?
Yeah, that's a really good question. If I could tell you for sure, I'd probably be but no, I think we are going to see crypto regulated more as a security, I think, because it seems to be, in my mind, that's how the regulators view it, is that they seem to think that it's a people are using it as an investment, and hence it should be a security. It's so I think we're going to end up, hopefully, at least in a place where at least everyone knows what the playing field is, and everyone's playing by the same rules. So I think we'll get there. I think it's going to take a little bit of pain to get that kind of all smoothed out.
It's going to be a journey, yeah, to be sure. No, great points. Nathan, your thoughts? Oh, I'm sorry. Excuse me. Yeah, Sawan.
Hello, hi, Scott. Just to echo what Brian and Nathan said, I think the regulators are they're finding it hard to keep up with the technology innovations and advancements, and they're happening very, very quickly. So it's a chicken and egg for me. I do think some of the regulators, namely MAS, has been very, very friendly to crypto, digital banking, even some of the new fintech initiatives that have come out. But for me, I think the key from a regulatory perspective is the lack of synergy, the lack of interportability between the regions. And if you can get that right, that would really innovate and fast track some of the innovations that are coming in. So things like passporting KYC across jurisdictions or even across banks, that is a very easy fix. So if regulators can actually put their hand up and say, you know what, we trust each regulator because they follow X standard, it really helps. From a traditional player or the incumbents, I think they always hide behind the legacy systems. They provide that as an excuse not to partner up with banks or other solution providers. And I think they need to stop doing that. There are other ways. You can build a middle layer. You can build in testnet environments to really fast track the adoption. So fintechs really need to start banging on the incumbent doors and say, look, this is what we can do. This is the solution. Let's test it out first, and go from there.
Do you have, you're in a kind of a unique position. Do you have any thoughts with regards to what you're seeing from a startup perspective, kind of on that same vein?
So the startups, again, we're going to focus on fintech or insurtech for today's conversation. I think they're a little scared to take that risk because the funders that come in, i.e. the angels or the VCs, they want the regulatory standpoint to be black and white. Whereas some of the traditional banks can actually take risks and maybe they'll get a slap on the risk. Whereas the fintechs cannot afford that because they'll be shut down very, very quickly. So that's what I'm seeing in the crypto space. It's too fragmented. I think people are finding gray areas to operate, and it's not good for the regulator or the ecosystem. So again, echoing what Brian said, the regulator really needs to take a stance. Is it a security? Is it a commodity? Is it a currency? And if it's neither of those, then actually make that very clear as well. It can be a P2P thing. It could be a peer-to-peer platform, right?
Following up, I was going to say, following up on this discussion, when we're at the ground level talking to customers, and that's what I was talking about in my intro. The problem is they say, geez, how's this going to affect me? Is it going to affect my bank? I don't know what's going on. And the whole ecosystem is really convoluted at the moment, but I'm hopeful that, of course, it is going to get sorted out because everybody is working on figuring out how to maximize the use of digitization and using technology to simplify the process.
Yeah, so just to kind of add to what Dan just said, technology is supposed to be an enablement tool. It's supposed to increase transparency and improve confidence in the market. With what's happening currently, it's actually not it's definitely an issue, but the ecosystem needs to come together and say, this is what we can do and this is what we will do to correct it, rectify it. There have been a lot of mistakes, but we can actually be ahead of the curve by rationalizing.
Some really good observations there. Before we move on to the next question, any other kind of thoughts to complement what Swan was just discussing from the other panelists?
No, I think you made some really great points, and yeah, I appreciate it.
Fantastic. Okay, next question. So if you had a superpower to bring positive change in the industry, then what change would you bring and why? So it's kind of a nice segue from the last discussion. And Nathan, why don't we start with you on this one?
I think we've been talking about the problems that we see. So if you ask me, more collaborative, more clear guidelines, you can probably say it would be, even from a policymaker's point of view, and access to funding and collaboration rather than looking just at competition. Competition is always going to be there, but it's all about seeing how regulators can help. And if it doesn't just happen with regulators, even institutions itself are working together. Some of them have done it really nicely, as it was mentioned, like MAS. It's also now taking some flight in other regions that I can see. If you ask me at this moment of time, I can probably say there's a lot of investments happening in markets like Saudi, etc. All of us on the panel would probably agree that's one of the areas where you have investment, right? And you can see a lot more drive happening. So if I was to say Asia, probably at the highest, Middle East, and then the rest following. That's how I see it.
Interesting. Swan, over to you.
If I had one superpower, I would increase financial literacy across the whole ecosystem for the end customer, for the regulator, for the startups. And yeah, I think that would, breed a knowledgeable ecosystem that's more proactive than reactive.
Good point, Brian.
Yeah, so I don't know that I would call this a superpower unless I could just wave a magic wand and make it happen. But one of the things that I personally have very strong feelings about is making the financial system more accessible to people who've traditionally been excluded. So that could be people who are currently unbanked, could be minorities that have had traditionally problems gaining funding to open a small business, rural people who may not have easy access to a physical financial institution. So making banking and financial services available to those people, I think it's a great opportunity that actually fintechs in general have to address some real needs in our societies. We have a really good example. One of our customers is out of Oklahoma, Citizens Bank in Edmond, Oklahoma. They're actually building a digital bank specifically for or for service members who have entered the military, because traditionally these people a lot of times are that they're maybe not really financially literate. They may come from a background where they don't have a lot of money, and they a lot of times get taken advantage of by predatory lenders. So they're trying to provide services to these people that provide them financing on fair terms instead of letting a payday lender take advantage of them. So I would like to see more of that in the financial industry.
Couple of quick comments as I listen to the panelists here. The first one about the education across the entire ecosystem that Sawan was talking about is very, very important. We were surprised to find out that when we talk to customers, we spend a majority of our time trying to do some education as to what's going on and to alleviate fears. And then my comment, Brian, to what you were talking about on emerging markets and underserved markets in particular, in Africa, for example, South America, it's unbelievable the opportunities there. And if you look at the aggregate, the opportunity is unbelievably huge, but the traditional incumbent system just isn't set up, it seems like, to actually address those particular needs in the marketplace. And that's where I think the nimble startups can make a big difference.
Yeah, I think, if you look at like India, for example, I think they're doing a great job, in fintech in general. But one of the things I was reading about just the other day was an initiative to really provide financing and boost incomes for farmers, in the rural areas there that traditionally have had a hard time gaining financing to buy their supplies, buy their seed and their fertilizer and things like that. So yeah, I think that that's a great model to look to.
Fantastic.
I'd just
Other
like to,
comments? Please go ahead.
yeah, I'd just like to add that I think in a lot of markets, what has really happened is, like specifically in India, there is an Aadhaar card. That itself is the one which is driving. It's like your KYC, your resident ID. And I see that something which is still absent in some markets and still taking off. At the same time, to your point on markets like in Africa, what you would see is there are a lot of digital wallets that are actually outpace the banking system or even access to lending from that perspective. So there's a bit of a trend that you will see across the board. And maybe it's a dimension where you can probably see where the currency is not strong, you'll see a little bit more insights into digital wallets taking off as compared to the others. So those are certain things that we see in the market as we look into.
Now, some great insights and thoughts. Thank you. So transitioning to our next question, how important a role startups and new technologies such as AI, as well as ML or blockchain or even data science will play in the disruption of this space? Perhaps, Swan, we could have you start on this one.
Sure, Scott. So we have to dissect everything, right? So AI, machine learning needs to be utilized to improve efficiency, but how do you get that utilization? You need to have a data lake, you need to have structured data, and that needs a standard regulatory framework. Again, it will go back to data sharing. How do you get that data sharing across financial institutions, across the new players in the market, or some of the established players? So again, that goes back to the regulator. The regulator needs to bring in those standards that allow open banking initiatives that better serve some of the underserved populations. Blockchain or DLT, look, it's always going to have this nuance where it gets mixed or minced with crypto and digital assets. They are two separate things. And that's where financial literacy comes in, right? So DLT, blockchain, great initiative, especially in the financial world and BFSI vertical, but it's always going to be operational efficiency, right? So if you combine the whole, AI, ML, data science, DLT, blockchain, you lead the initiatives to increase transparency, you increase security, actually. Essentially, that's what you want to do, right? And you reduce costs, but people need to be aligned there. The whole ecosystem needs to be aligned there.
Yeah, good points. I mean, are you seeing, before we kind of pass it over to some of the other panelists, what are you seeing from a mobile perspective? The big changes and advancements in that particular industry, how that's impacting or advancing or even taking a step back in some cases?
So mobile, for me, is always going to be the telco play, right? So when the telcos start partnering up with their banks, with some of the alternative lenders, that's where that whole edge comes in. But some of the telcos don't want to do it. Some of the banks don't want to open up the vault, essentially, or the data sharing for their customers. But some jurisdictions have done it well. I was in Korea most recently last week, and I saw the digitalization, and I was very, very impressed. And that, again, came from the regulator. That, again, came from the incumbents. They adopted the new technologies very, very quickly. So mobile does have a play. It's an enabler, but it needs to have that telco, BFSI, FinTech partnership to happen.
Yeah, okay. Terrific. Brian, your thoughts?
Yeah, I mean, I think one of the places that's very relevant to me personally, in my position, and kind of one of the trends I'm seeing is the transition of digital banking, especially from being just kind of a transactional thing to more of an advisory role, especially in the small business space. And so I think what we're going to start seeing there is new technologies such as, artificial intelligence, machine learning, and data science, being able to leverage those technologies to then go beyond just providing someone with the ability to transfer funds and view their balances and view their transactions, and actually doing things like providing very relevant insights to that small business or even that individual, that consumer user. But if you can have a system that looks at a business's data, a small business, and analyze it, and then automatically provide them actionable insights, and they can use those insights to either save money or make money, I think that's a huge business for us, or a huge benefit for a small business. So that's an area that I'm really excited to kind of see where it goes.
Fantastic. Nathan?
Yeah, I think, as I said towards the start, startups are very focused. They go after certain problems, right? And to the point which has been made by the other panelists, technology is an enabler, firstly, right? Now, if you look at us at the bank where I am, as head of digital banking, we are adopting new technologies, but we are also working with the regulator and the startups to really see if they have something, it's better to take it and work with them. You don't have to build everything yourself. That's the world that we are living in now. And if you look at data science, it just gives you those insights. And I've had the pleasure of working with some of the great minds in data science to really see, really valuable insights that they can really get out. AI itself is growing. Fraud detection, you would see a number of startups today who are giving their products and saying, we are looking at fraud detection, customer experience itself. So there are a whole lot of avenues that have been brought in. Now, some of them will be winners, some of them will grow and fail as well, as startups. And as organizations as we're always trying to see who is the best partner, see the opportunity, see the challenge, and see how we can work through. So that's the view.
Interesting.
Sorry, Scott. The concern that I have at the moment, especially regarding AI, is the press that it is getting on a global basis about how AI is going to knock, the hell out of society, and all of these things about voice recognition, and having President Biden say something that he didn't say, et cetera. And where I'm going with that is that's going to impact the regulations in this particular area, and I'm concerned that it may inhibit the advancements and the positive actions that can happen through the technology. And anyway, just a concern that I have. I don't know if any of you see the same thing.
No, your concern is very fair, and I do echo that as well. But you cannot completely contain technology. I mean, that's a failure point just to start with that. I think the other side of it, if I was to just take that fake news or the fake videos that are popping up around the world, is the other opportunity is, if you actually think about it, if there was a very good actor who was very famous at a particular time, let's say Elvis, today you can actually make a movie with him. And you can actually hear him, see, the behavior, and that's a value add proposition. Another one I can just probably put out there is there are AI tools where even if you're sitting at a cafe, it can just make your sound be heard by the others on the other side. And with the backgrounds that we have behind us, you never know exactly where you are sitting. So there is a value, and then there is a challenge as well. It's how people use it, and is it possible to identify people, and who takes that action that needs to be strengthened. We cannot control technology because it's moving at a pace where I have seen when we started banking with just the online, then moving to mobile, then going to something called host to host, then API, microservices, and here we are, where we're looking at AI doing some of the stuff now. It just happened in the last 20 years, and it's not going to slow down anytime soon.
So if I
from-
can just give my 2 cents on
Please.
this, actually. So this is actually quite, Dan, listen, very, very valid points from different spectrums, right? So for me, AI has always existed. So I think Nitin touched upon it. It's been there for the last 20 years. Corporates have used it. Google's used it. Facebook's used it. All the FANGs essentially have been using it to sell, right? Consumerism. What the recent developments like Bard or OpenChatGPT has done is democratize AI to give everyone access to it, right? So the problem was it was too fast. It goes back to literacy. We were not ready as human beings to adopt it. We got scared. There's a bit of scaremongering going on in the whole ecosystem. Huh? You've seen Europe come in and try to regulate some of the AI initiatives that have been open source. So AI is here to stay. I think what we need to focus on and change the focus is to educate people on how best to use it. So I think that's where the difference is. And that, again, becomes an ecosystem issue, and that becomes a regulatory issue.
And then you go back to the problem of the regulators making, hopefully we can have regulators that actually understand the issues and understand the technology, so they can actually put in place, regulations that actually make sense and are actually going to advance the technology and not stifle it.
Correct. I think if you're more proactive and if you're forward thinking, you can get that right. But again, some of the regulators are scared when they see a fake video of, Ben Bernanke speaking, and they're like, "Well, okay, this might actually cause a lot more issues." But actually, there's ways of rectifying that, right? Educate people on how to spot a fake video or a deep fake.
Since oh, please go ahead.
Oh, I was just going to say I've actually seen use cases for using AI to spot fakes that are created by AI. So
yeah. And when we talk about cybersecurity, financial crime, AML, AI really, really fast tracks that. So perfect use case, right? There's good and there's bad. We just need to find the right balance.
If we zoom out, kind of look at the globe, which has become a very small place with technology, do you see any particular region, going faster or taking a better approach? I use that word better kind of loosely, from a banking industry, perspective, and other complementary thoughts from that perspective.
I think Latin America and South America has been very, very impressive with just the speed at which they've really developed. And then Africa, to me, is really a hotbed of innovation right now. And I'm actually very excited to see where Africa goes in the next 10 to 20 years. They've traditionally kind of suffered for a variety of reasons from being kind of lagging behind the rest of the world in a lot of areas, but there's a lot of very motivated, very smart people there, and I think they've got a lot of potential. So that's one that has me excited to watch.
Thoughts from the other panelists?
I can come in on some of the initiatives. I think Cambodian CLMV region actually, for me, presents a lot of opportunities. It's not stuck on legacy systems, so some of the core infrastructure can be developed from scratch or the ground up. And with the new advancements and the new tech that's coming out, it can really fast track the adoption. And it's well needed, even the cross-border payments, the remittance. So yeah, I think Bank of Cambodia, the Central Bank in Cambodia, is doing something very, very cool in DLT and blockchain. So one to watch, actually.
That's a very good point. Is in some of the more developed countries like the US and in Europe, and I think a lot of times we're kind of a little bit stagnant because we have these legacy payment rails and we have these legacy institutions in place. You have places that traditionally would have been considered less developed, and a lot of them have really been able to leap forward very fast by kind of bypassing those legacy ways of doing things. You look at some of the less developed countries, they went straight from no one having internet access straight to everyone has a smartphone. Whereas, in here in the US, we went from, we went to dial up on your PC to high-speed internet on your PC and then to mobile. They kind of just skipped that. So that's a really good point, I think.
Yeah. The markets I look at is China, Singapore, UAE, India as well. I think in all of these markets, China for large scale, everyone knows the transformation they've done, but what is really truly changes that people really don't want to use paper money. And that's a whole difference in terms of the mentality of the population that has been achieved. And that allows them to further adopt. If you look at India, it's growing in terms of the number of people using mobile phones. Looking at electronic payments, I think it's overtaken many countries. UAE and the GCC region, one thing which is interesting is that they also have these resident IDs where they're really going, as soon as a child is born, right from then onwards, they can tag them to benefits and they can tag them to an account. So looking at that problem, which is happening in the other regions where it is banked and unbanked, the first problem of solving that is they're thinking about 5 years, 10 years in the future. How do they solve for the future rather than solving for the past? So there are a huge number of transformations and opportunities. MAS, I would probably say, is because they've not just looked at people, the problem that each and everyone has that, but also in businesses. You look at fast payments, real-time payments across borders. I think that's something that is really transforming many countries. And that instant cross-border settlement is what will add value to a lot of businesses.
That's a terrific point of view. That's a great segue into our next question, which we've kind of touched on a little bit already, but maybe we could zero in on a couple of points or thoughts, and that is, what you collectively feel or individually are the largest hurdles in the adoption of innovative solutions in this space, whether they be the technologies that we've talked about, such as AI, whether they be startups that are disrupting the space from a process or an efficiency perspective, or maybe attacks to that age-old SWIFT system, which we've seen for decades, and is really kind of the go-to. But it's kind of looking at a fax versus sending an email. So I'd love some thoughts from each of you on that perspective, and maybe Brian, you could start.
Yeah, sure. I think we've touched on it quite a bit, but I think the biggest hurdle, or the first hurdle that comes to mind, is really regulations, the regulatory environment. But with that said, also sometimes that can provide you some opportunities to innovate as well, and can drive innovation. So, like, for example, in the US, it's very hard to get a new banking charter. And that's kind of opened up this whole ecosystem of partnerships between financial institutions and fintechs. So where you have the fintech is providing some really new innovative capabilities to consumers, they get access to the banking system and the payment rails via the bank, and then the bank is getting deposits and loans through the fintech. So sometimes you kind of have these unintended consequences that maybe a hurdle sometimes actually becomes an opportunity. But beyond that, I think what I always just kind of see the biggest hurdle as far as adoption of a new technology or a new solution is really, do you have product market fit? And making sure that, okay, I've got some really cool new promising technology, but is it a solution looking for a problem? And you see that sometimes with new new technology, new solutions. So if you're not making someone money or saving someone money or saving them time, they're probably not going to adopt it. They're, you know, you have to give them a compelling reason to switch from their old way of doing things. So I think that's where sometimes startups can really kind of fall down if they don't have that fit.
That's a great point. Nathan?
I think most of the points already what we spoke about, but I think just to add to that, you have scaling issues. I see infrastructure costs still high in certain areas, in certain regions. Security and privacy concerns as we grow continue to be there, and that impacts the overall mindset. Education, literacy, tops everything. You know, and of course, regulatory challenges and uncertainty in the markets today, you know, are questioning people even at the point of investment. Is it the right time to invest?
Fantastic. No, it's a great insight there. Swan, your thoughts on that particular subject?
Yeah, I think Nitin and Brian covered it. But Brian, one point you just made was actually excellent about technology finding a solution, right? But technology is a solution. So I find it absolutely hilarious in the last 2-3 years. I've been coming across so many startups that just want to apply blockchain into a problem, but actually blockchain is not the answer for that issue. It's a great point. And then Nitin, I echo the infrastructure play. I think that infrastructure is still a bit nascent. But I want to go back to a very basic thing, and at the risk of sounding philosophical, there is a resistance to change from a human aspect, right? So that human aspect covers everyone in the ecosystem. So the old ways of doing things are probably better in their mind, but that's where we need to find financial literacy, or actually just education on how technology can improve efficiency and cut down the mundane tasks and actually upskill a lot of people. And that, again, comes very, very relevant in this day and age, because people still need to be upskilled very, very quickly, the way things are moving, right? So yeah, I'll go back to basics. I think the biggest hurdle is that resistance to change from the whole ecosystem.
Yeah, tends to be a foundational element that needs to be built upon, right? Yeah. Go ahead, Dan.
Sorry, Dan.
Yeah, no problem. Swan makes an excellent point, because especially in very large institutions, we as a small company, as we go after a larger prospect for us, there are just way too many committees, way too many people that are not willing to stick their neck out. And so therefore, and I'll just use the banking as the example, I think some of the sweet spots for us are the mid-sized banks that they have lots of wonderful customers that are doing international business, but their local bank has to then find a corresponding bank and another bank and a further, and you know, you guys, I'm speaking to the choir here. So it's a really interesting issue. The human aspect of it is, how do you get the mindset change to adopt some technology that can actually make an impact on customers and life and the betterment of the society?
Excellent
So
point.
to that end, and kind of extending that whole thought process, which is, I think, you know, as I said, foundational, right, to not only change, but it also endorses the need for education, and then pulling, you know, just the community together. And that community now is, you know, with technology, become the globe itself, you know, whether it's region by region, whether it's domestic, whether it's international. Do you have, as a panel, you know, any recommendations to startups from the perspective of wanting to, or even seeing an opportunity to partner with banks, whether they be big or mid-size, and where do you see the potential value proposition there? Maybe Swan, we could start with you.
Partnerships is probably the best way startups can really scale and provide their product market fitment. But I would start small. I would focus on one specific problem the regional bank or the large incumbents have, and then go from there. I think you have to start small and then scale up fast. That's my 2 cents on the startups, especially in the fintech and insurtech sector.
And from a value proposition perspective, are you able to identify maybe a key value prop that a startup in this space could bring to a bank that maybe is very ingrained in their processes or in the same approach that they've used for the last X number of decades?
Again, finding that integration between the legacy system and what they're trying to do, their new solutions. I think that is the key value proposition, and that will cover every single business unit that a bank has. So for me, I will focus on the integration part between legacy and their solution first.
Okay, perfect. Thank you. Brian, your thoughts?
Yeah, we're kind of probably in a little bit of a similar scenario here where we partnered directly with financial institutions also. And where we find a lot of value is also kind of that three-way partnership where we have let's say a small community bank who needs to be able to do cross-border payments. So we would partner, with someone like Steamchain to provide that functionality, because we're not always going to build everything that a particular financial institution can provide or is going to need. So kind of building those relationships with other providers and being able to kind of get that foot in the door a lot of times is very helpful. We've actually had quite a few of our bank customers that have brought us other solutions that are complementary to us and said, hey, have you thought about working with these guys? And that's someone that we're very interested in. So it's kind of like a whole big interconnected web. Nothing happens in a vacuum there. The other thing I think that it's especially when you're talking to financial institutions that are very kind of set in their ways and entrenched is it's very essential to make sure that they have trust in you as far as, are you going to be a solid partner? Are you going to be around for the long haul? Are you going to be reliable? That's always, I think, from a financial institution standpoint, probably one of their biggest concerns, just because the nature of the industry tends to be very conservative.
And probably even more so too over the last couple of months and the change in bank security and stability. So that's a great point. Nithin, your thoughts or perspective on that?
Yeah, I think if you look at it across the board, when you're really looking at partnerships, as an organization, as a financial organization, we really look at the one point that was raised. Banks are known for trust, although right now that's one of the biggest challenges in the financial industry that we also hear about. But when we are looking at partnerships, we are really looking at those partners to be able to share from their side, their perspective, and be able to also deliver. And to that point, either it's going to be a new product altogether, or it's going to be a migration product. And that migration is a double-edged sword in most of the organizations that I've actually seen it, because the client experience, internal stakeholder management, etc. Again, access to the best of technology is always going to be a challenge, but as and when, if there is a fintech and they're growing, they should be upfront, they should have their main product spot on, and that fit to market, and having the right view at the right time is very, very important.
Yeah, excellent perspective. I appreciate that. Any other thoughts from the other panelists before we wrap up the Q&A session and I hand it back over to Pankaj?
I just look forward to, I'll give my 2 cents at the end. I look forward to a cross-border regulatory framework that sets the gold standards, or at least basic standards, and it can be copy and paste across some of the Western economies that can be taken or replicated into the emerging markets or the frontier markets.
I would second that, to be sure. That's fantastic. Well, hey, thank you, all three of you, very much for participating in the Q&A section and providing your input and your insight, which is extremely informative. So thank you once again. I'm going to hand this back over to Pankaj for the next phase of the conversation.
Thanks a lot, Scott, for moderating this panel really well. Love the insights that we gathered so far from our panelists. I especially love the fact that it's extremely crucial for the startups to partner with the right kind of partners. It could be the system integration partners. It could be the bigger fintechs that may have complementary solutions, and then sell the combined solution to your targeted customers, because credibility is a huge issue when you are a startup. And obviously Nitin, Brian, Sawan also talked about trust, security, credibility that these banks have to take care of when they are working with these startups. But yeah, again, it has been a fantastic conversation. We could have gone on for hours and hours, but we'll have to move on to the next part of the event, which is roast session. And why I love to dive into roast session, because that's the opportunity for us as startup founders to learn from the subject matter experts. Most of the times we are not able to get a brutal, honest feedback on a solution. We get a sugar-coated BS or complete silence. And if you are sitting with some experts, I think it is the best opportunity to learn what they think about the solution, what could be the potential pitfalls, what could be the right go-to-market strategy or product strategy for Steamchain. So why don't we do a brief presentation on Steamchain, and then let's get the feedback. Let's get some hard-hitting questions from the panel. Okay.
Perfect. Let me share my screen, and then I'll hand it over to Dan, who will take you through this brief overview. One moment here. All right. If you can see my screen, okay, Dan,
Yeah.
I'll hand it over to you.
Yeah.
Oh, thank you very much, and welcome to Steamchain. We've solved the problem of high international currency conversion costs, uncontrolled currency fluctuation risk, and unnecessary labor costs for any company making or receiving international B2B payments. Next slide. Now, our vision is to disrupt the global SWIFT system by reimagining the methods by which international FX payments are made through digitization. So here's the problem, and it's a big one. Currency conversion is expensive, costing anywhere from 5 to 11% or more, and that's according to the World Bank. Fluctuation risk can lower the bottom line, and that's according to HSBC. Maersk and IBM estimate that 20% of the cost of international shipping is related to antiquated billing processes. So when you look at it, the global market is absolutely huge for international trade. Every day, there are thousands of companies making millions of payments, incurring billions of dollars in wasted fees. Now, we've created a simple-to-use platform where clients create their own payments, and our platform automatically executes those payments, settling in the currency of their choice. Now, our solution can reduce currency fluctuation costs up to 100%, currency conversion costs up to 80%, and labor costs up to 20%. But most importantly, we can increase the bottom line for our customers. Our solution is cost effective. We charge anywhere from 1% to 2% per transaction, as opposed to the higher rates companies are currently paying. Our fee is paid at the time of the transaction, which makes us a cash business, and we have two options on our platform. The first option leverages our strategic FX partners, Corp, which is headquartered in Canada and traded on the New York Stock Exchange, FacilitaPay, located in Brazil, and OFX from Australia. The second model leverages global digital asset exchanges, and then transferring the payments takes less than 60 seconds, and settlement takes less than a couple of hours. We can provide currency access to over 200 countries and more than 150 currencies. We have 4 patents that are pending on multiple technology areas, and they're independently valued at over $2.8 million. We're growing our business via a go-to-market strategy that focuses on both direct sales and on channel partners in the logistics, consumer goods sectors. And we are in revenue, and we're looking to scale the business. We have billion-dollar clients. OIA is an example. They're a logistics provider, and they're using our platform to fund their overseas operating costs. We've reduced their currency conversion costs from 11% to 2%. We can beat our competition because of our strong value proposition by saving time, labor cost, and money. Our competitors have high fees, longer transition times, and less flexibility. Simply put, our solution is cheaper, faster, smarter, and more efficient than the competition. So thank you for considering working with Steamchain. We look forward to a fruitful and productive partnership.
Fantastic. Thanks a lot, Dan. Let's see what kind of questions are we going to get today, or feedback.
So I'm just curious as far as things like KYC, you know your customer, AML. Do you guys provide anything in the ways in that area as far as making sure that the recipient of that payment is, you know, a legitimate person, not a prohibited entity, and someone that, you know, that the sender is not going to get in trouble if they transfer funds to them?
Dan, do you want to grab that?
No, go ahead, Scott.
So from an AML and a KYC process, we take a twofold approach because we are, as Dan walked you through, if you will, a provider. And at no point do we touch or hold or possess any of our clients' money, which was very strategic on our part because we're relying on our partnerships, both with the FX as well as the digital providers. So as we entertain onboarding a new client, we do have them go through both an extensive and rigorous KYC and ML process. And we provide background checks and compliance that's necessary both internationally and domestically before approving a client. To your point, extending that even further, Brian, to the recipients of those funds, we also perform a KYC process for recipients of our clients to ensure exactly what you just noted, in that they are both above board, that there's no nefarious transaction activity that's occurring. We also ensure that our provider partners are performing that same compliance for redundancy's sake from both the client as well as the recipient. And then on a weekly basis, we're performing bad actor reviews on all if you will, participants, both clients and recipients, for a proactive review of any type of red flag type of warnings that occur, which we will address first with the client, and then with the recipient if need be, to ensure the security as well as the integrity of the process around international transactions.
Thank you.
Right. So I would really like to understand, you're looking at going after a market which is more or less known as correspondent banking today. And there are fairly a lot of banks which are having a large coverage in this space. So as a regional bank, why would I choose you against them? And I'm asking this question because if you think about it from a GCC point, I was just looking at all the various examples that you had over there. I was just trying to see how are you covering us or this region as well.
Yeah, I think that, and Dan can complement this response. What we've endeavored to do, and the reason that we have multiple partnerships as well as two sides of our business, there's kind of a twofold approach here. We have two sides of our business for one reason, and that is to offer, the opportunity of a one-stop shop, if you will, regardless of your adoption of new digitization for payments or your ingrained trust, if you will, in the traditional FX type of methodology for making payments. You can come to us and use one or the other. The two do not overlap, if you will, with the exception of the perspective that a client has the opportunity to use one or the other or both. Now, that said, that aggregation strategy at a high level that we've taken offers our clients the ability to come to us and have accessibility to both the value propositions that we've offered, which is ease of use, lower cost structure, and speed of settlement, and of course, security, which goes without saying, but it should always be a high priority, and then make or receive payments across the globe in a streamlined fashion. If you will, think of a PayPal approach, but for corporations, large scale, ease of use, no cap on the size of transaction or the frequency of the use of the platform. That is really the value proposition when it comes to partnering with mid-size or even small banks, that we can extend their value proposition with variety, with flexibility and capabilities, and offer them to in turn offer their clients those like value propositions. So hopefully I'm kind of giving you that perspective or an answer to the scale that addresses that question. But Dan, feel free to step in if I missed anything.
No, you did great, Scott. Let me just drill down a little bit further. Just this last week, we've finalized our partnership with Visa Direct, and we're going to be using the back end for them to make payments. And this is going to be a game changer, I believe, for Steamchain, because we're focused. We've got clients that are waiting in the wings in South America and over in Africa. And I'll just use South America as an example. The central bank in Bolivia, for example, doesn't have enough USD, and we've got clients that are importing goods from Paraguay, and they can't make payments, and they're getting absolutely hammered. But with the Visa Direct solution and our platform, they can now pull the money, put it into a card, and as you well know, they can put it into a digital wallet, into their bank account, into a debit card, a credit card. It's absolutely a phenomenal partnership for us, and it's going to really be able to let us focus on these emerging markets where, as I talked about earlier, is going to be a huge opportunity for growth.
Great, thank you.
So let me just ask a couple of questions, Dan. Firstly, great presentation. I'm really excited about your initiative. I think it works well done on the traction and the Visa Direct. That is a game changer, actually. So well highlighted. I want to focus more on the digital asset space. So you said you connect with some of the exchanges. What's the value add here? I get you're going to try and convert fiat into crypto and then crypto back into fiat, right? That's what you're addressing. But that's why you're connecting into the exchanges.
Yeah, one of the strategic objectives for us to partner with digital asset exchanges, those that we listed, and we are very careful, by the way. I will highlight that, to only partner with very stable, secure, scalable exchanges, and we have strategic partnerships that are synergistic, if you will. Because the methodology around the business for digital asset exchanges is really for any one of us as a consumer to open an account, buy and sell crypto. That's their revenue model. We bring them a synergistic opportunity that is complementary to that business model, and that is a direct integration which affords both our clients the ability to open an account with them in a business structure if they don't already have one, use our platform for even faster execution of settlement and lower fee structures by utilizing that digitization process. So what ends up happening with our direct integration with those asset exchanges, a client will come to our platform, select this methodology, create a transaction in the same way that they would for an FX based transaction. However, our platform will access their account with their permission in creation of that transaction, convert their origin currency, which sits within their asset account, to a stable coin for a period of about 20 seconds as a simple vehicle for then a platform programmatic exchange to the recipient's preferred currency, and then drop that currency directly into the recipient's exchange account in just a few minutes, with full settlement in under 20 minutes, regardless of their geographic location. So there's an even faster truncated time for transaction and settlement, which avoids currency fluctuation because it is truly real time, and then further lowers the overhead costs because no bank is involved, if you will, and therefore there's no overhead costs there. So there's speed and lower costs and usability because of that digitization capability.
Okay, brilliant. Thank you.
Yeah,
Go on,
so
Dan.
let me add a little bit to that also, and it has to do earlier with the point that you brought up about education. We bring a customer on board, and because they're conservative and slow to market, slow to go to market with a new idea, they say, "Look, we like your FX rail, but some of our customers are saying, we like this idea, and we could make a payment from this currency to that currency using the FX rail." So our strategic and tactical approach is to bring on as many customers as we can and have a methodology by which we can grow into where we see the market headed in the next several years, which is on the digitization side of it.
No, understood. I think it's great. Do get my contact details from Pankaj, and we can have a separate conversation on digital activate and what you're trying to achieve.
Perfect. Thank you.
Absolutely. Will do. Look forward to it.
Any other questions for us to answer?
Or even the feedback on the
Brian, Brian, you were on mute. Sorry about that.
Sorry. Yeah, just maybe really quick. Scott, you mentioned, about being very selective about the crypto exchange partners that you guys work with. That was actually just something I was interested to get your thoughts on, because obviously there's been a lot of bad press recently with like FTX and some of those others. So just kind of interested to have you expand on that a little bit.
Yeah, no, absolutely. On our selection process or our partnerships, or just comment in general?
Yeah, just kind of, I guess maybe just in general, but yeah, specifically, what kind of criteria do you use maybe when you're selecting a partner, I guess?
Yeah, no, that's a great question. And it's, to be honest, it changes, and it has changed from a strategic perspective based on, learnings, based on the kind of the movement in the landscape with regards to exactly what you just said, FTX and some of the changes, but also, that ever changing kind of perspective, if you will, on not only digital assets, but also the involvement or the good and the bad with regards to blockchain, which still sends many people screaming from the room when they hear that word. So our criteria is kind of, it's fourfold. One is looking at strategic partnerships with exchanges that are both domestic and internationally compliant, and continue to be compliant with the ever-changing compliant requirements based on either the international banks, the domestic banks, and even in the United States, it's state by state. They have to have a high degree of liquidity to ensure that stability. Security is of the utmost importance on behalf of not only ourselves, but our clients in turn, because, for example, we have 4 layers of security to ensure that all information is obfuscated, and that if there was, God forbid, there hasn't been yet any type of information access, that they're taking very careful steps to ensure the technology is ensuring security of our clients' information. And then, of course, the ability to integrate with our platform and in turn have a user experience for our clients that is by and far above the rest. So there's security, there's stability, there's liquidity, and there's also compliance that we look to, and we constantly are ensuring that they are adherent. I'd say the last piece of that is the constant review from an AML, KYC, and a bad actor perspective, because again, we need to constantly be careful. There's trust, but there's also verify and trust, and then there's trust and verify, and that's a constant focus for us.
The other thing from a consumer usage perspective is that we can actually hook our customer up with an account executive at Coinbase, for example. I don't know if you try to ever talk to anybody at any of these exchanges, it's just damn near impossible to make that happen. So we're able to facilitate the onboarding for the customer into these exchange accounts and move from there. And that's really important because that gets it down to the human level again. Nothing is more irritating than calling a business and getting that endless push 1, push 2, push 3, push 4. And if you don't like it, go back to 1, it just drives me personally crazy. So we're trying to keep the human capabilities on not only the use of our platform and the user experience, but how our customers interface, not only with us, but with our strategic partners.
Okay. Yeah, thank you.
Dan, Scott, I have one final question on my end. There was a slide on patents. Can we just talk through what the patents are and what you're trying to do?
Yeah, so Dan's going to pull up some information to be able to kind of give you a high level. Our overarching approach with patents is to create a moat of some sort with regards to competition. So, patents are as good as patents are, right? The moat is as deep and as broad as you're able to make it. And this is one attempt of our overarching strategy to ensure that, we have as much protection from that perspective of our patented technology capabilities, but it also generates a level of interest too for a potential partner that would like to, for example, India as a country has done, leapfrog over particular competitors in the marketplace because of what we've already developed, what we have capable and available.
Okay.
Oh, yes, I was just pulling that up, and there's 4 areas that our patents cover. And what's important is that it's the interaction of 4 different patents. The first one has to do with artificial intelligence and the gathering of information that we can get that is non-proprietary, from the transactions. And we think that we're going to be able to monetize that in the future. Also, a thing called a trust environment, TEE. The third has to do with international logistics and payments. And then the fourth is a patent that integrates the 4 of those, and no other company has those. When we went through the process, by the way, of getting our patents applications in each of those 4 different areas, and I've got a whole deck that I can send you, Swan, on the valuation and the patent process if you're interested. But what's really interesting about it is that there are like IBM, for example, patents everything, and so there's something like 87 patents in the one area, and there's 92 patents in the other area, and that goes over all 4 of the areas. But what ours patents do is cover the integration of the 3, and that drives our platform, and this is all on the digital side of the business. So, but I'll get you any of you that are interested in this application. We got 2 decks. One is the market analysis that was independently done, and it was done by one of our investors, by the way, which is the ATT group that is funded by Panasonic out of Japan, and they've got a local office here in Portland where we're located, and they helped us with the process. As you well know, it's a very daunting process. We've been waiting for a year to get the approvals on them, but like everything, it just takes forever to get something done through the bureaucracy.
Yep. Okay. No, I look forward to the next conversation on that. Thank you.
Okay, you bet.
Any other question or probably feedback or recommendations to Steamchain?
No, I think this has been really great. I think the other aspect I would probably just like to ask around would be around trade, because it's from a business to business corporate customer space. You've solved the trade, or rather the FX side of the problem better. That's how I see it. Around the trade side, is there anything that you have in the plans? Because as a whole, I think what you will have in comparison to the major banks in this space is always where they also have the FX and the trade side covered.
I'll take maybe a different perspective on answering your trade question. So let me know if I went down a dirt side road for you. But something that we strategically have realized, but is also a value proposition for our clients with regards to trade, and especially when compared to our competition, which is the traditional financial institutions, is the following: that companies, will request a payment process for goods, for example, in a trade environment from a bank. And typically it can take time, it can take quite a bit of time. And in some cases, it could take a few weeks before a full settlement has occurred. And many manufacturers or providers of goods will wait until that payment is not only confirmed, but it's fully settled and even potentially settled within their local currency before they either release shipment, release that product, or start the process of manufacturing. So what we've been enabling our clients in that very specific example is the ability to shrink their supply chains, to be able to make real-time payments directly in a preferred currency, whether it's same currency or country currency, to a bank of choice by the recipient. And by doing that, they're not only saving time for themselves in processing the transaction, but they're also saving an enormous amount of time, which we all know is priceless in our currently challenged supply chain environment, which is shortening the supply chain, allowing better forecasting of when product will arrive, how they can better utilize even logistics solutions, because they can predict when that product can be released and or ready. So there's a lot of intrinsic value that goes beyond just that real time, we do it faster, cheaper, and smarter, that can be strategically incorporated into some of our B2B partners, around their planning for supply chain.
What's interesting also, and we greatly appreciate your feedback, when you make a presentation deck and presentation like we did, it was kind of a high level overview. It covered both the problem, the solution, the size of the market, and how we're addressing it. But we didn't actually put an ask in there, because we're in the process of looking for funding, but we're also in the process of looking for customers. We're also in the process of looking for channel partners, et cetera. So it's from a startup perspective, it's always a delicate balance on who your audience is
Mm-hmm.
and what is the message that you want to send. So I'm hoping that the presentation that we made at kind of the high level today covered all of those aspects, but we did not get down into the dirt, about how much money do we need, or what are the details of a partnership, et cetera.
No, Dan, I think your presentation was really great. It talked about exactly what you as a company have. And I also appreciated your competition matrix, which you had to really show exactly what the competitions are. I think where I'm coming from is that there is an opportunity with the incumbents, where trade also has certain things like guarantees, which are executed and required by corporates. And that's an area where a regional bank always likes to partner with someone who can give them that reach. Now, there's an opportunity which you can probably look at from that perspective, because that is in demand with regional banks around the world.
I think you're absolutely right about it. And from our perspective, to scale our business, we need to have those partnerships, because the bank, like the regional banks and the banks and the channel partners, they've got the access to the customers. And if we can provide a cost-effective solution with some sort of revenue share or benefit share, however that matrix works out, then that's what's going to be able to grow a very large enterprise company for Steamchain. So your point is well taken.
Just to echo what Nitin said, I think what you need to do first is get that critical mass, get that transaction volume up. I didn't ask about what your transaction volume is currently. So once you get, to that critical mass element, I think then you'll have that bargaining chip or that credibility behind you to actually get that letter of credit or the guarantee, or even, partner with some of the working capital providers that would allow you to scale up quite quickly and look at other revenue streams. So great point, Nitin, and I think Dan and Scott, you have that covered, hopefully. I do have one point on optimization. So when you're making these payments through the buyers and the sellers and the recipients, are you optimizing internally?
Optimizing internally. Could you expand on that?
So if you look at what Wise Currency Cloud or Neum does, they have multiple bank accounts in local currencies, and they will optimize internally before they go to the market to convert. So is that something you have in place in the platform or no?
Yeah, so we're in that particular case, let's use our FX partners. So they're holding liquidity in each of these country currencies. So there is direct optimization, which allows that real-time settlement. And that's also the reason why we have multiple FX partners, because as you all three well know, each FX partner, will be specific to a particular geography or geographies. Bringing them all together allows us to offer and turn our clients the globe. But yes, they each have liquidity there. So for optimization,
So you will tap into their liquidity, not necessarily your own. So you won't. Is there a way of matching your own first before you tap into their liquidity pool?
So what we're offering on our platform is a real-time kind of FX rate, which represents the liquidity that they hold, and it's stripped of any type of overhead. And by the way, we have also eliminated any type of wire fees too. So that's an ancillary value proposition for our clients. So they'll see real-time refreshed every 30 seconds FX rate based on the liquidity that each of those FX providers has for our client. And once they confirm, it's locked and then executes.
Fine, thank you. That answers my question. Thanks a lot.
You bet. Other comments or questions? This has been great. Feel free to be, beat us up too if there's anything there that you like to go after.
Yeah, it's been very helpful. Yeah, I'm just interested in kind of talking to you guys some more.
Fantastic. Appreciate it. This has been great from my perspective. Thank you.
Fantastic. I think we have been able to get some amazing golden nuggets today from the experts on what could we do better, what are the opportunities to grow, and so on and so forth. And I think there has been a lot of comments and recommendations on the partnerships. I think we need to focus more on that to grow as quickly as possible. But again, thanks to the panelists today for your insights, for your feedback, for your guidance, for your questions. Really love that conversation. And I think this is just the beginning of this relationship. I think we need to reconnect in the next few weeks or so, or in few days, and see how we can collaborate, how we can help each other in achieving our organizational goals. So again, thanks everybody for joining today's conversation, and let's reconnect soon. Take care, stay safe.
Thank you for having us. Thank you. Pankaj, get Dan and Scott and Dan to reach out if they can.
Yeah.
All right.
I shared your number.
Take care.
So, yeah.
Great. Perfect. Thank you. Take care. Bye-bye.
Thank you, everybody. Take care. Bye.
Thank you.